This is the MTPredictor weekly update for Labor Day, September 5th, and I'm going to try to go through quickly go through some of these charts. I'll keep it a little briefer this update, but we've had some significant things have happened that we've been waiting for. Again, this is the Dow mini contract, the daily chart. We had wave 3 down. We formed this ABC pattern into wave 4. So the 3-wave down here, ABC into wave 4, you see that's labeled here. The A, B, and C also labeled. This is what we were looking at last week. When we had the B wave in, I projected up the wave C. We came right into the typical wave C resistance here. The software generated the automatic TS3 sell signal on a red STF, meaning the bigger trend is still down. We can put the analysis on here. One click. And let me pull this in a little bit because you can see the target is actually here. This first target is actually the wave 5 down, the wave 5 projection down. This is the wave C down. And so the software has picked this almost a 5-to-1 target there at 10,264. But the wave 5 target, in fact, let's just draw that. Let's just draw that in here. Right about here, a little better than 4-to-1 at 10,388. So you can see we had our Labor Day trading here. Another sell-off. We'll look at that on the smaller time frame in a bit. And so we've taken out this 100% initial risk line here. So if you, those of you that have the software that were playing this short signal in one form or another, whether it be puts or the actual futures or the diamonds or some other derivative of the Dow, you can move your stop from the initial position to the entry, basically 11,460, and for a risk-free trade. And we'll see if we can get down to that target around that 10,388 area. All right, so we'll see. Anyway, risk-free trade at this point. In the Dow. So pretty much played out as expected. I thought they might go a little deeper into the wave C before this setup happened, but it is what it is. The setup happened. We got the red sellers bar here telling us the sellers were overcoming the buyers, and that's the setup there. So we'll see how that plays out. The S&P weekly chart, again, we had our 5 waves up into our minimum wave 5 resistance with our DP sell signal. This was the target on the DP sell signal here. I actually formed wave 1 into wave 2, and this went wave 3 down as well. We've got a retrace now back into this wave 4 area. The STF here is still strong. Here's our strength band, the gray band at the bottom. And the oscillator is into that strength band, telling us there may be more downside ahead. And we've come into the wave 4, and now with the beginning of this week's trading, we're back outside of the wave 4 to the downside. Well, we can actually project the wave 5 down on this market here for the weekly time frame. Four and 5. So here's your wave 5 targets. The minimum wave 5 target sitting right around 1080 in the S&P. That's the E-mini contract. So we'll see. It doesn't mean that we can't come back into this wave 4 area. In fact, this looks like its market's been kind of going sideways in big ranges so far. So but we have hit that resistance. Here's your next support and targets to the downside in that market. Let's take a look at Goldman. Again, Goldman went wave 3 down. Here's your wave 4 resistance area. It did retrace some, didn't get into that area before it's rolled over again. Here's the wave 5 down, minimum wave 5 down targets right around that $90, just about maybe 90.10 in Goldman. $100, the round number here, should be just natural kind of support. So we'll see what happens with that. We could go some type of A, B, C pattern back up into here. before things roll over again. We'll see, or we could go right down to the target here. The banking, the BKX on the weekly chart here, again breached our trend line, our head and shoulders, little head and shoulders pattern here. We got a minor 5-wave pattern down, and we did sell off again last week on the BKX. Here's your next major support there, sitting right around 31.20, and so we'll see if it works its way down there. Eventually, if the other markets go wave 5 down, then we'll see probably see the banking index in this DP support area. So we'll watch for that. And let's look at gold. So gold went wave 3 up, pulled back into the wave 4 support area with the blue buyer's bar there. It's making its way. Here's your, we move this DP over here. This is your minimum wave 5 resistance. Again, that would be a new high in gold if it gets there around 1936. I think we're at 1903 in the futures currently, but we could still see a move back into this wave 4 support as well. But the fact that they've breached this, you see little dots here, the ATR stop, that's kind of a little resistance area in and of itself. And they closed above that, and they've taken that out now Sunday night to the upside. So chances are greater that we'll see the wave 5 up. Also the DP area here, the decision point area, will start right around 1942, 1943 area. So we do come up here, then we have to look at this area as a potential correction, maybe another ABC pattern into a wave 4 DP. So we can put that target now ahead of time. If we come up into this area, we may end up seeing this area back down around the 50-day moving average, maybe even below it at that point, which would be a good long-term buy area below the 50-day but above the 200-day. So we'll watch and see if we go wave 5 up here into the DP. May even get, depending if we've got divergence on the oscillator, we may get an automatic DP sell signal, similar to what we had back in gold sometime back. Right here. Here's an area where we'd gone wave 5 up here with the DP, and the correction was back to the wave 4 DP before we get the buy signal. Again, below the 50-day, above the 200-day, we got this TS4 buy signal. This was a 12-to-1 at a 12-to-1 risk reward. Of course, gold did hit that and went beyond. So that's what we're looking at potentially in gold. Similar pattern in silver. Silver, we had gone 5 waves up. That was almost got to the all-time highs in silver back here. We got a correction to that. We're in this, what we're going to look at wave 2, since this is a major resistance back here. I projected the wave 3 down here. You can see we did have a sell signal back here in silver. And your next major support, again down around 2080, would be the wave 3 down. The DP off the wave 4 sits around 2340. But this is still an area we're going to watch. This area, if they take this area out, this area, in fact, if you had shorted this, we got to the 100% initial risk line here. If you moved your stop to your entry, you had a break-even trade there. But we're still watching this area. If this wave 2 gets taken out, then we should see new highs in silver. Here's your major DP resistance up here, sitting around 51. Whoops, let me put that back on. Around 52. All right, if it doesn't, then we could see a major correction in silver back down to this area. So we'll watch that. Oil, we got a new sell signal in oil. TS3, we had gone this TS3 into some DP support. We've got an ABC pattern that formed our TS3. It's got a nice healthy target of 8 to 1, which would, in order to hit that target, we'd have to see oil down around 74.38. Again, this one also, we've hit the 100% initial risk line since this is the bigger time frame, the daily chart. Stops can be moved from 89.91 to 88.20, which is the entry there. Again, in a risk-free trade at this point. And finally, as far as the bigger time frames, I want to look at the US dollar here because it has moved out of this wave 2 or B kind of support area here. And this little ABC pattern here, you see the next resistance levels. The US dollar was 75.30. The next DP around 75.55. So in this 75-ish area, you've got your next resistance there. So we'll see if the dollar can make a little progress. It's still in this kind of bigger chop kind of zone, but if it does break out of this area eventually, it may be a big move one way or the other. So we're going to keep our eyes on that. And then let's just go down to the smaller time frame, what we had on Friday. This is the S&P E-mini, but we had this outside gap down. Here was Friday's open. Here was the Thursday close. When you get these outside gaps to the downside, if they can't fill them in the first half an hour or so of trading, the tendency is the market's going to roll over and continue lower the rest of the morning, sometimes the rest of the day. And we got our first pullback. We got our TS2 sell signal, so the software was also picking up an Elliott wave pattern in here, which was the wave 4. We got a red seller's bar there with the TS2 sell signal. We can put the analysis on again with one click. Short of 2 contracts, risking $325. The target was 3 to 1 here at 1172.50, with a profit of 972 if that target was achieved. This trade took a while to play out. These set up while we were in our trading room on Friday, and took quite a while to play out. And you can see finally did hit the target there. Never did hit our stop at 1185.50. And so some nice trades on Friday in all three: the NQ, the YM, the ES, all similar. Some nice trades actually on the day before. This was also a let's look at today's holiday trading here, because a similar thing here. We had another outside gap down. They weren't able to fill the gap. Market continued lower for the rest of the morning, and then you had another sell signal back here before that market closed. Obviously a shortened trading day there, but these outside gaps to the downside are typically very good, letting you know that there's selling pressure, and our STF is confirming there's selling pressure. The STF is strong. They're telling you there may be more downside ahead. Sometimes you can get away with even bracketing that first candle if it gets breached, putting your stop back here, just looking for a reasonable target, using the software to give us some target, and you can see how that was a nice trade right there. Or even waiting for some type of pullback. The only kind of pullback you got in here was right in here with the red seller's bar, setting up a trade off of that, still having enough risk reward. So anyway, that's how we use that intraday. Looking at the bigger time frames, works any market in any time frame as long as it's liquid. So if you're interested, check out MTPredictor.us. There's plenty of information there, as well as you can pick up the free trading course. Might as well take you there. Right here. enter your name, email, click submit, and we'll send you the free MTPredictor trading course. It'll explain everything that you see on the charts, what it all means, why the software was developed. Anyway, hope that's helpful. I try to cram a lot in a short period of time, but there was a lot to cover. So we'll see what we get this week, and we'll pick it up back next week.